All right, welcome back. We're excited for this one. We got another edition here. We got Gene Marshall, CEO, co-founder, VetPay, Rob McDermott, over at 401go. Rob, let's turn this over to you. Want to tell us about yourself? Tell us a little bit about 401go, and we'll start the conversation there.
Sure, absolutely. So, Rob McDermott with 401go. I'm the regional vice president of strategic partnerships for the New England area. So I cover New York up through Maine, and been here a little over a year. Before here, had a couple of years at another FinTech 401k provider, and then dating myself back to 2004, started ADP. Have been in payroll, insurance, exposed to benefits, retirement, up through, Connect Pay, which is a local payroll company up by you guys. And then, like I said, another FinTech provider. So we are a FinTech 401k company. What does that mean? It means we're bringing, a 21st century experience to 401k, which has generally been a archaic type of an environment, right? Legacy systems, a lot of paperwork, and we've brought that all into an electronic format, no paper, app-driven, tech-driven, integration-driven, and a bundled solution too. So when someone comes on board with us, they get the full gamut of the 401k experience. So record keeping, third-party administration, all the way through fiduciary responsibility on our end. So an admin or a plan sponsor has nothing to do but check in 15 minutes a year and make sure that things look good for us to file their 5,500. So really kind of take over the whole experience for a small business or a mid-sized business owner or admin.
Perfect. I guess walk me through that, because say I'm a practice owner. I know retirement plans are a great benefit to provide my staff. You have simples, you have 401ks, and we preach the tax advantageous nature of the 401k. But what is third-party administration? All those buzzwords that you use, what does it really mean to me as the practice owner? What is 401ko's responsibility as the plan provider?
Quite frankly, we take it all off their plate, right? So they really don't even need to know what any of that means. We'll explain it to them. So the record keeping portion is you log in, you want to see what your balances are, you want to see what your fund choices are. You want to move from, an ETF to a bond fund, what have you. That's that portion of the experience. A third-party administration just means we're helping that practice owner stay compliant with what's top-heavy testing, meaning they can't put in more. Well, we can walk them through how to do more for themselves, but highly compensated folks can't take advantage of a plan versus an hourly worker or someone who's making less, right? So we help them with compliance through that. Provide the ability for us to sign and file their 5,500 form. So that's the year-end filing for 401k. So they don't have to worry about that. And then on the back end, as far as the monetary portion or the fiduciary portion, we provide the services around notifications. Let's say a fund is coming out of the lineup. We'll send an email to all the participants saying, hey, if you have money in this fund, you need to move it to something else. So taking control over the day in and day out of the fiduciary portion as well. So really bundling and removing any liability, removing any administration that they have to do on a day-to-day basis to provide the 401k to their participants, or their employees, I should say.
Outstanding. I would think, if I'm a startup or just starting a 401k plan, the integration with you and your team tends to be a little bit easier. Would I be concerned if I have a pre-existing 401k plan? How does, say, with a Vanguard or Fidelity, just to name, a random solution, how do they integrate or change over to the 401go platform?
Yeah. So when we bring them on board, that client or that practice would be assigned a customer success manager who not only implements the 401k and helps them move that plan from Vanguard, let's say, over to us, but then stays with them throughout the process at 401go. So moving forward, they'd have that same person's phone number, email, link to their calendar, a one-on-one white glove experience. But in that process of converting, what we do is we'll actually start a 401go 401k as quickly as we can, right? Because we don't want to miss a deduction period for a long time, maybe a payroll or two, but that's worst case scenario. So they'd actually start a 401go account with us. We'd link it to you guys through our 360 API, which means they don't have to do anything. All the information goes back and forth. And then in 60 to 90 days, when Vanguard that terminates, assets are liquidated from Vanguard, and we would walk them through the process of how to terminate properly, making sure that the I's are dotted and the T's are crossed, right? That liquidates, comes over to us. And then whoever had balances, we put those balances into their individual participant accounts. So we really walked them through the whole process from A to Z on how to, terminate properly, get the funds over, and continue that, deduction cycle with their employees so that they're not missing out on, potential gains in the market or, losses, like if you will too, but making sure that that stays streamlined for them in that 60 to 90 day window.
That's huge. I'll come back to, you mentioned 360 integration. I want to come back there. But before we do, what I'm hanging on to is you started by saying kind of tech forward, FinTech, automation. But then what I heard is white glove service. So to me, that's reassuring just with our model at Granite Peak with Gene and what he's creating at VetPay, HCM. It's boutique, it's high touch, it's all about the relationship. So it sounds like
Correct.
you're not just, correct me if I'm wrong, you're not just embracing technology and expecting technology to be the lead sole driver. You really have the people behind it as well.
Correct. And I think that's what separates us in this market or in this FinTech world. Where I came from, it started that way. So it was, one-on-one service. And then that company grew exponentially. And then it became, a type of an environment. Email us questions, go to our chat bot, that kind of thing. And the owners of our company, they don't believe in that. And they believe in, we love tech, and tech's going to run this thing, and we're going to bring all the best features and tools and financial wellness tools to the table, helping people above and beyond just their retirement. But if the owner of your vet practice or the administrator has a question or there's a loan issue or what have you, they have that access to that person on a one-on-one basis. And I really believe even if we continue, and we are growing and we continue to grow on this pace, we're just going to keep hiring people so we don't lose that one-on-one experience for our customers. And that's why we have, I think it's like a 98.6% retention rate. People stay because they love the fact that they can call Matt or they can call Abel and they get them and they talk them through it. And we really pride ourselves on that white glove experience.
That's huge. That's huge. Go back to the 360 integration. Maybe, Gene and you can kind of expand upon the VetPay, HCM, 401 Go partnership. What does it mean to collaborate with the payroll provider? And I guess talk us through that, what that would look for like a client lens experience, the user, how does that all blend together?
Yeah, I'll start here and then turn it over to Rob to talk about the actual API integration. But, being in the payroll industry for so long, at one of the large payroll companies, a lot of clients are used to an integration, meaning that I don't want to be in charge of having to move the funds, right? Because there's a lot of regulations and timing, right? You can't hang on to the funds for longer than a certain amount of time because people could lose gains in the market. So when we started building VetPay and started reaching out to different technologies and different 401k companies, we needed to find somebody that can offer that integration that most people are used to if they have a plan, right? And highlight to people that don't have a plan of why that's important to have that full integration, right? But a company that has the same ethos that VetPay does, right? Because I'm sure there's other companies out there that have great technology and that could probably integrate with VetPay. Right. But like you said, Jared, there's more to it, what we're trying to build. And I think 401 Go aligns with what VetPay is trying to do here. So as far as like the actual technology and what it would look like if you didn't have the technology or the integration, I'll let Rob kind of talk about that.
I agree, Gene. Culturally, it's a good fit, right? We share the same values as customers are concerned, right? It's we want to be there for them every step of the way, right? But if we didn't have integration, right, does that mean your practice admin or the owner, after each payroll, would have to download like a 401k report or a payroll register, have to go through it, really put the numbers in, or maybe there's a spreadsheet available with another provider. And, I better go check to make sure nobody changed their, contribution percentage from 4% to 6%, or they went to go ask for a loan, right? So all that stuff that is done on a payroll to payroll basis is all done behind the scenes with, rudimentarily, machines talking to each other, right? So the client runs payroll, payroll talks to 401go, 401go talks back and handles all of those intricacies behind the scenes. So really it presents a set it and forget it scenario. So once it's up and running, everything's moving. And there's, high touch monitoring on the back end where if something does break, it is addressed quickly and generally probably within the next payroll cycle. So, for that owner or that busy vet practice that doesn't have time to spend a half hour putting his 401k deductions in, as long as they run payroll and they're connected to us, they'll know that it's done for them behind the scenes.
I just think that's so huge because you think everyone is busy, and it's who's processing payrolls, the practice manager and or the owner doctor, and is like that the best use of time? Absolutely not. So to have that feature, because we see it, I've seen it unfortunately too many times where we get the call and say, hey, I thought per pay period money was going into the retirement account. We come to find out there's 20, 30 grand of monies that was never put into the plan. I would think, liability, my liability bills
Sure.
going off. And just from a cash flow standpoint, now I need the money and I need it immediately. And I had already probably, spent it. So where do I find it? The other thing, which you just said, Rob, which I just want to make sure is repeated, is even like you're saying, even if my employee, they buy a house and all of a sudden, hey, I got to skip my 401k contribution for a couple months, that's automatically changed. So I don't have to worry about the fluctuation in contribution rates.
Right. So if they report that to their payroll person, if they go into payroll and they change their deduction from, 6% to 0, that will then reflect over to us to make sure that that's handled on our end as well. But yeah, that, payroll, it'll shut down that deduction and then we just wait for it to get turned back on again.
If I'm thinking even on like the simplest aspects of a 401k plan, most I would say come with some form of match, right? 3% match. How is that generally funded? Is it per pay period? Is it all at the end of the year? And how does the because you mentioned discrimination testing. Is that a hands-on experience with 401go and the practice owner as well, that you run the illustrations to make sure they're maximizing their contributions but staying plan compliant?
All of the above, right? So the first part of the question, and this is all when a client implements with us, we go through a whole plan design discussion, right? Do you want the match to be per payroll? You can do it at the end of the year. It's really up to them. How do you want to match? There's all sorts of options for them to do so. We actually do discrimination testing on a per payroll basis. And why that's important is because, it could be February and a client goes out of compliance on their testing, and we can address that in February and March versus waiting to the end of the year like competitors do and saying, oh, you guys are top heavy and we got to go take a look at that. So from February through the end of the year, we can make adjustments and say, all right, well, you need to put in this or take this out. And it's all going to kind of come out in the wash towards, as we get towards the end of the calendar year. So the per payroll testing is big. And particularly, in this environment where maybe there's some higher earning folk, right? We want to make sure that they're doing things correctly, compliantly, and catch things fast versus waiting to the end of the year.
I feel like every conversation I learn right from you, Rob, because that's another feature I didn't realize 401go provides. We see it sometimes where practice owners will call us and say, hey, my provider reached out and said they'll do the discrimination testing. It now costs me X amount of dollars to do that plan, do that one test. You're saying you just weave that in per pay period, which to me seems like a huge value add. That's often another surprise cost to the practice owner.
Absolutely. And everyone loves that even more of the advisors. So the advisors love that more because then they tend to get pulled in at the end of the year to try to help out, right? So when they hear that, their ears perk up as well because it really does save people's bacon in a way, right? Because hey, you're catching it in March versus then you have 9 months to straighten it out. So.
I mean, then if I put my, selfish tax hat on, obviously you get the 401k credits for these plan administration credits and then the employer contribution credits. I would expect or think that having paid my payroll and my 401k partnering up makes that credit calculation a whole lot easier at your end because, all the information is one platform. It's right in front of me. Is that a correct assumption to have?
Yeah, no, 100%. We help the clients maximize their tax credit. And tax credits are available to startups as well as conversion plans within the first 3 years of them implementing a 401k. So we'll help them maximize that credit based on, the parameters of what's allowed, auto enroll, expenses, things like that. And you'll like to hear this, and your accountants are going to like to hear this too, or your CPAs, is we go ahead and fill out the 8081 form at the end of the year. So we populate that form. Here's your maximized tax credit. And hey, just go email that to Jared and he can put it into your tax return and away you go. And we've helped them make sure that they don't leave any tax credits on the table.
That's huge. I mean, that is easily, not that, that credit calculation, because we have to reach out to so many different people, that easily delays returns usually a week or 2 weeks because you're chasing information and numbers, and to have it all already pre-populated and just downloadable. My gosh, that's such a value add to the practice owner to get to us, to get the returns out so they can get their monies back. That's huge, huge.
Yeah. We've seen an uptick in accountants and bookkeepers and of the like inquiring about that, because it is, you got to take advantage of that when you can, right?
Huge. Obviously want to be mindful of everyone's time here. We're coming up on it. So I think just either a couple final questions, any pitfalls, anything that you've seen in the startup plan or the plan that's converting over to 401 go that you would advise or highlight for the practice owner to avoid?
Really? I mean, as long as we're engaged and we're working with the other record keeper, there are certain record keepers that make it a little more difficult. They string it out, right? Because they're holding on to that money too. The only thing that I've seen come up is in that scenario where we convert a plan, let's say from another record keeper, right? A participant who is engaged in a 401k and going in there and taking a look at things on a regular basis may log into 401go and say, hey, I have like 180 grand in there, and now I have like $350. Like, what's going on? Well, it's because we're waiting for those funds to come over, right? So they just would let that employee know, yeah, this is a new 401k. Your balance is low now, but when we get those funds from the liquidation, everything's going to look the way it did before. So that's really the only pitfall that I've seen, in the conversions that I've been a part of.
Rob, Gene, I want to wrap up and like I said, be mindful of your times, but really appreciate the time here. Looking forward to this partnership and collaboration for many, many years to come, and just being an outstanding solution to the practice owners. So appreciate the time. We'll make sure to toss on your site, your contact information in the show notes as well.
Yeah. Hey, I really appreciate Jared, and looking forward to a relationship.
Absolutely. Thanks, Rob. Appreciate it.
Thanks, guys.